Transition investing is on the rise in Asia, with 87% of high net worth investors showing interest alongside strong demand for sustainable investing. Joining us to discuss this trend is Eugenia Ko from Standard Chartered Bank. So, Eugenia, what exactly defines transition investing in this context, and how is it different from traditional sustainable investing?
Transition investing is actually a subset of sustainable investing. So it refers specifically to investing with the ambition of supporting and enabling the transition to a low carbon economy. So if you think typically of sustainable investments, they tend to be those that are a huge focus on the green sectors like renewable energy. But with transition investing, it also includes investing in the high carbon sectors, but in companies that are leading in their plans to decarbonize or to move to a low carbon economy. So if you think about it, it could be the leaders in, for instance, steel and cement, who are ahead of their peers when it comes to their decarbonizing journeys, and therefore being able to win market share and be competitive. And it also includes companies that enable the transition, for instance, scrap steel producers.
Now, on the 87% investor appetite for transition investing, Eugenia, what are the key drivers behind this?
So essentially, if you think about it, a lot of clients in our markets, they have made their wealth in high carbon industries. And so they are aware of the opportunities and risks from this. Some of them may also already be seeing demand from international companies, which are their clients, coming through their business and their RFPs to us for points around how they are shifting to a more sustainable business model and how they're decarbonizing. So essentially, they are keenly aware that, if you're ahead of transitioning, you will be competitive and a leader in tomorrow's world. And that is what they want to build their investments into as well. Additionally, we see that there is also a bit of a personal element to it. There is a significant portion of respondents that say that they want to be able to drive environmental and social impact with transition investing.
Are there any specific risks or concerns that investors usually raise regarding transition investing?
Yeah, so I would say that while this topic is kind of up and coming, it is still very nascent. So many investors are not so familiar with the concept. So, one of the kind of biggest concerns that they raise is the perception of higher risk compared to perhaps the more traditional types of investing, and also the lack of benchmarks to compare it with the other investment products. You also have a proportion of investors that think that they could lead to lower returns. What's I think really interesting is while investors are interested in this as a concept, actually only about 15% were able to fully define what it meant when we surveyed them. So plenty of education to be doing in this space.
With that being considered, let's also talk about your forecast. How do you see this trend shaping investment strategies over the next 3 to 5 years?
Essentially, we see it being mainstream into investment selection. So essentially, if we think about where sustainable investing has gone with kind of its ESG scores and metrics, a lot of that is being baked into the investment process. And we see the same happening with transition investing, that, the core material factors that define how well companies are transitioning, that will increasingly be looked at by many asset managers and mainstream into the way they select their portfolios.
Thank you so much for joining us today, Eugenia. Chat with you again soon.
Thanks for having me.
Once again, that was Eugenia Ko, Global Head for Sustainable Finance, Wealth, and Retail Banking at Standard Chartered Bank. For more news, visit asianbankingandfinance.net.